Welcome to Short View Trading. My name is Chris Watling. I'm the CEO and Chief Market Strategist of Longview Economics and Short View Trading. And this is your morning market hit for Monday, 23rd of September. It's around 9 a.m. London time. So if you want to trade equity index futures, you want to trade S&P 500 futures or NASDAQ, FTSE or DAX, you want to go long or short on that 1 to 2 week swing time frame, what factors do you need to think about? How should you go about making a decision whether to go long or short those equity index futures? That's what we're going to dig into in this video. The first thing you need to do when thinking about investing on a 1 to 2 week time frame when you're trading these equity index futures is contextualizing price action. How are markets behaving? How are different global financial markets, different global assets interacting? Because last week the price action was really pretty strong. And of course the week was dominated by the question of what will the Fed do at its meeting on Wednesday? Will it cut 25 or would it do 50? Coming into the start of last week, 25 absolutely baked in the cake. Everyone was expecting that was a no-brainer. The question was, would they do more? And on Monday, Tuesday, it was about a 65-70% chance they might do 50. And then, of course, on Wednesday, you got those 50 bips, and that propelled markets higher on Thursday. So what we saw last week was strong markets pretty much across the board, led by the small and mid caps. And you see that NASDAQ 100, as we're putting up now, trying to break out of that pennant formation on the back of Thursday's strength. You see the S&P 500 that we're putting up in front of you now, back at its highs over the course of last week, getting up to that level. And then, of course, the week was led by the small and mid caps, the S&P 400, which was back also at its highs, and the S&P 600, the small caps, also back at their highs. So it was a very strong week, pretty much across the board in US markets. There was some lagging price performance from the likes of Nvidia and the Philly Sox. In fact, the Philly Sox is one of the worst performing major equity indices in the US, as was the Dow Jones Transportation Index. Interestingly, if you look at Nvidia, you can see the stock actually rolled over a bit last week. It was down around 2.5% over the course of the week, despite the strong performance of other major indices. That in and of itself is pretty interesting. Not all asset classes got involved in that strength last week on the back of 50 bips. Maybe that's speaking to the rotation that we're seeing within the US equity market over recent weeks. Either way though, however you look at it, momentum is now pretty toppy. We've had a good week or two in major equity indices. If you look at the global equity momentum model that we're putting up in front of you now, it's back on sell. If you look at the US S&P 500 industry group momentum model, where we look at the momentum of all the industry groups underlying the index and add that up and aggregate it and score it, that also is pretty close to sell. And then if you go a layer deeper, even further down into the market, look at the single stock momentum, this model we're putting up in front of you now, that reached sell at the back end of last week. So momentum at an index, sector and single stock level is either on sell or very close to sell. And as you can see from the single stock model, over the course of the last 6 months, we've had 4 prior sell signals, and all of them, where you can see I've marked on with the red arrows, all of them result in price action in the S&P 500, the main equity index, that's sideways to down or even meaningfully down over the following week or 2 or 3. So lots of sell signals starting to emerge. Market's starting to look a bit toppy. Indeed, if you looked at single stock call option volume, it's got a similar sort of message. Bit of frothiness coming back into the market in the near term. And therefore, what do you want to do with this? How do you want to trade this market? To see how we're thinking about it, our view on the market price action each and every day, a regular update of all the trading models, please take a free trial of the Risk Appetite Gauge publication. Simply click on the link below and we'll send you that for free for a bunch of trading sessions. Or if you're a subscriber, it should be in your inbox around 9 a.m. London time each and every business trading day. So on top of the models and the price action amongst various key global assets, what else are we watching in terms of macro events and key events over the course of this week? Well, there's a bunch of central bank meetings. Second-tier central banks in a sense, but all quite interesting. The SNB, the Riksbank and the RBA, they'll all be watched closely. What's their message on inflation and interest rates? Then secondly, there's a whole bunch of flash PMIs out across the globe starting today. This is a first take on economic activity in the month of September. It gives you a good sense of how September's playing out on a macro data perspective. And then finally, we've got other bits and pieces of quite important data. We've got US Conference Board consumer confidence, we've got durable goods orders, we've got German IFO, personal income spending, and a whole bunch of other interesting macro data over the course of this week. So that's it from us. That's your morning market hit for Monday, 23rd of September. Thank you for listening. Please do subscribe to these videos on YouTube. Simply click on the subscribe button and share on social media, or follow us on Facebook, LinkedIn, and or Twitter. Thank you for listening. Stay safe, trade well.